Welcome to the Lady Landlords podcast, where we empower women to gain financial independence through real estate investing. I'm your host, Becky Nova, founder of Lady Landlords. If you're ready to buy, manage, and grow your real estate portfolio, then let's get started. Welcome to this week's episode of the Lady Landlords podcast. I am your host, founder of Lady Landlords, Becky Nova. And today I have a very special guest joining us. We have Geena Young from Centric Business Solutions that is going to be talking to us all about the fun world of accounting. So Geena, thank you for joining us today. How are you?
I'm great. Thank you. Thank you. Thank you for having me.
Yeah, of course. I really enjoyed our conversation that we had a couple of weeks ago when you did the Lady Landlords Roadmap program with me. And I think it's great because you come from such a knowledgeable place, being an accountant. So I was like, we got to get her on the show. And I was really happy too that we had that conversation right after April 15th.
Right. Thank you. April 18th this year. They moved the date, but nonetheless, yeah.
Give you a whole weekend to do extra work. Wasn't that fantastic?
Right.
Yeah. Well, good. Well, I'm glad that we were able to get settled. And I'm really hoping that some of the tips that we can talk about today are going to be able to help our women get set up for then their next year as they're growing their portfolio here in 2022. But Absolutely. What I'd love to start with is, can you just share a little bit about you and who you are outside of the accounting world?
Absolutely. That's what I like to talk about most. Grew up from North Carolina area, amazing parents, amazing support system. Grew up in a family of educators and entrepreneurs. And so that's essentially how I got to where I am. I'm the youngest of two daughters and was just home for Mother's Day. Always like going back to that area. Of course, now I live in the Washington, D.C. area, and I've been here for a number of years.
We don't have to name how many years that's been.
Exactly. Since college, I got a job as an auditor with Department of Defense in my senior year of college, majored in accounting and finance, moved straight from college to the DC area, and I've been here ever since. And so, yeah.
And so was accounting something that like you would always wanted to go into, or did that just kind of happen over the years?
Interesting story. So again, I mentioned that I come from a family of entrepreneurs. My grandfather, my uncles were all are all entrepreneurs. And so at the age of about 12 or 13, my grandfather and my uncle, who owned a number of different businesses, including a gas station in the heart of Durham, brought a lot of the cousins in to do different work. And so one of the things that I was tasked with at 12, 13 years old was to be the bookkeeper. Back then we used this large green ledger paper. And so there were no computers then. And so I'm really telling my age, but I fell in love with it. I really enjoyed the process of bookkeeping at that time. Kind of putting the numbers down, making the numbers make sense and that sort of thing. And so I continued to work in the accounting field for different summer jobs and for the family. And so decided that was, originally I wanted to be an attorney. I really wanted to be an attorney. Okay. And I realized that after I had been exposed to bookkeeping and accounting, I thought that that was a little more fun than law for me.
I thought accounting was more fun than law.
I know.
I mean, you drive a hard bargain here for fun. So I can't imagine what you do on vacation now. if accounting is what's more fun than being a lawyer, but.
Exactly, go figure, right? So no, I decided when I went to college, I knew when I started college in my freshman year, oftentimes you go in undeclared in terms of your major. I knew when I stepped foot on campus that I wanted to go into accounting and finance without question. Yeah.
And most people cannot say that. And once again, to be such like then like a unique field, right? You always kind of hear, you know, firefighter, actress, singer, painter, and you're like, nope, accounting it is. But it sounds, but I at least see where you're kind of coming from. Both of those are very highly regulated, highly organized, usually type A personalities that understand numbers and organization and structure. Absolutely. Are really what I feel like kind of like relates those two. So it sounds like that for you was actually a great fit.
It was my thing. I loved it. I had friends who were in every social work and going into pre-med, and they were like, accounting? Really? Who wants to do that? well, somebody has to do it, so I guess it'll be me.
There you go. And then what I also think is great is that you just don't work at an accounting firm.
Yeah.
You are the accounting firm.
Yeah.
So
Yeah.
just since we are a women empowerment organization, I just kind of would like to, one, point that out, but two, hear a little bit more about what made you decide to go out on your own rather than just working for somebody else.
Oh, wow. That's a great story behind that too. I have all these great stories. So I worked in corporate America for a number of years. Started off working in the federal government here in the DC area. My first job out of college was working with a lot of older gentlemen who were just drinking coffee all day and waiting to retire. So you know what that did for me.
It sounds like our federal government,
right? I'm like, I need some energy. I needed excitement. I'm a new college grad. And so I stayed there for about a year and a half, almost 2 years, and decided I needed something more fulfilling. And so from that point, the trajectory of my career was working in the nonprofit arena, kind of community engagement, grassroots organizations. I worked for an AIDS organization on Capitol Hill, which was an amazing experience. We did a lot of work closely with the White House. I was a CFO, kind of climbed the ladder, CFO, VP of Finance. Then I kind of transitioned over into real corporate America, where I was working for global multi-billion-dollar companies, international. And so loved it. I actually loved it. But I realized over the years, because, you know, for me, it started off me working 9 to 5, but having family and friends asking me, can you do my taxes? I didn't do taxes. I'm like, okay, yeah, I'll give it a shot. Fell in love with tax returns, preparing tax returns. And really more importantly than that, just helping individuals kind of make sense of the numbers, educating them, helping them to understand what is a 1040, you know, that sort of thing. So I was working 9 to 5 for a number of years, doing some kind of freelance work. It went from tax returns to actually doing accounting for startup businesses, neighbors, church members, family, friends who were starting businesses. They knew how to make baked goods, or they knew how to run their marketing firm, but they had no idea what to do about payroll or what to do about accounting structure, like you mentioned earlier. They had no idea. And so out of a love for just wanting to help small businesses to just thrive from a back office perspective, I decided, after many years of thinking about it, I decided one day, enough is enough. I'm going to do it. And it was about the time that actually my son went off to college, because I needed, as a divorced mother of one, I needed to have some stability. And so I realized that I had saved up enough money, had put enough to the side, I had planned, had my business plan. So I was like, now is the time to do it. And I have not looked back since.
That's great. And I love how you said, you know, I understood that I needed that stability, but then now it's mom's turn, right? Then you were able to kind of take that risk, and you've had great success with your business. One thing that I think was interesting that you pointed out was, as an entrepreneur, we are best at the thing that we do, right? Making those baked goods and selling them, offering some type of service, whatever it may be. But entrepreneurs have all these other legalities, paperwork, all these other things that we have to do that really is not like necessarily our strength, right? Like I didn't go into doing coaching so I could do my taxes. It's because I know how to help somebody, or I can provide a product or a service that's going to make a difference in the world. But then you have to do marketing that nobody thinks about, and bookkeeping that nobody thinks about, and you know, then now file your taxes every year. So
absolutely,
that's interesting. Then the idea is to really rely on someone like yourself that would be that expert to take that burden off of the entrepreneur and allow them to really just do what they're best at.
Absolutely. Absolutely. And so often, and I do a lot of speaking engagements, as you and I had talked about, where I'm talking to folks who are just starting out, they're just ramping up their business, or it could be the extreme, somebody who's been in business for 15, 20 years, and they're in a place of, I never knew this. I never understood this because no one has explained it to me. And so oftentimes family, you know, owners of businesses will bring in family members, the cousin, the wife, who knows nothing about accounting, but with the expectation of, this person is going to help me stay organized and pay my bills and process payroll and get me financial statements. And oftentimes what happens is that person that they put in that role really doesn't understand. And because tax laws change constantly, so many different moving parts. And so that's one of the things I enjoy the most, is really seeing that light bulb go off in the heads of business owners and thinking, or them saying, oh my God, I never knew this. This makes my life so much easier, because they think they can't afford an accountant. And I always tell them, you don't know until you look into it, but you cannot not afford to have an accountant on your team, because things will come up, you never know who's going to deal with that. And so my mantra is either you pay now or you pay more later, because you're going to pay one way or another. It's just, what is your tolerance for that,
And it's also who you're going to end up paying, right?
Yeah.
I'd rather pay you to help me than to pay more to the federal government because I didn't know any better.
Absolutely. Absolutely. See it all the time.
And what I also love about you, Geena, is that you're more than an accountant. Would you like to share a little bit about what also is one of the goals that you're working on personally?
Oh yeah, absolutely. And what brought us together, and that is, I have launched last year an LLC in a real estate investment firm to do a number of different things, primarily buy and holds, and some other strategies that Becky is helping me with. So I'm super excited.
Exactly. So we have an accountant that's also a real estate investor. And what I love about that is that you also wanted to move into real estate investing because you recognize still the need for multiple income streams.
Absolutely. Absolutely. Critically important. So very important. Absolutely.
Even though sometimes I feel like multiple income streams drives an accountant crazy.
Okay.
Right? At the end of the year where it's like, no, I have this W-2, this 1099. Oh yeah, I also do this. And then there's money coming in from here and here. But once again, that's the whole purpose of having a great accountant, right?
Absolutely. Organization is your best friend, So
one of the most popular questions we get in Lady Landlords is about kind of building that team, finding the right people to work with when you're a real estate investor. Does it matter if I'm a real estate investor, if my accountant owns property, understands rental property? Is that something that I should be specifically looking for when I look for an accountant?
I don't think so. I think there are certain nuances of real estate investing from a tax perspective or an accounting perspective. However, you don't necessarily need someone who is a real estate investor or who, has done that before, because at the end of the day, accounting is accounting. There's certain things that are a little bit different by industry, but the accounting rules are what they are.
Right. So once again, it's not that they need to necessarily practice what you preach, but it's more that as long as they understand what the laws are, it shouldn't really matter, right? Like
Absolutely.
I want to still go to, once again, any type of attorney that you talk to, that doesn't necessarily mean that they in practice are doing those same things, but they still understand the concept and what needs to be done and what's not.
Absolutely.
So, okay, so not important for them to own property, but it's important for them to clearly understand the tax benefits associated with real estate investing.
Absolutely. Right? And I think for me, one of the things that some of my clients who are real estate investors, because I have a number of them, said when I told them I was going into, starting this LLC within real estate investing, they were like, oh, you're going to be great at it because you understand it. You've done taxes, you've done our accounting, so you get it. And so I think that's an added bonus if you do have an accountant or an attorney who is a real estate investor, but it is not a game changer. It is not, if you find someone that you like from an accounting perspective or a legal perspective, because I say that you need one of each on your team when you're in business for yourself. If they don't own property, it's not a deal breaker at all.
Not a deal breaker. Yeah. So then when I'm interviewing accountants, what questions should I ask them to see if they would be a good person for me to work with?
I will say the one thing is with anybody, you can interview them and they're going to give you the answers that you want to hear oftentimes.
That's very true.
Right. And so like my mother used to say that the proof is in the pudding. Like how do they behave? You hire them. What kind of response are you getting? So the things that you want to talk to someone about when you're interviewing an accountant is, for me, and these are pet peeves, do they typically with their clients, stay in touch with them on a regular basis, not just at tax time, not just once a year, but are they in contact with you regularly? And as a client, if I am calling my accountant, how responsive are they to me? I don't necessarily need you. I may not need you to get back to me, you know, in 30 minutes, but at least within a reasonable amount of time, at least within 24 hours, you have to be responsive as an accountant. So that's
So
one
that's
thing.
actually, that's my pet peeve in working with anybody is what is like the response time, right?
Yep.
Like
Yep.
for any type of service that I'm calling, especially, you know, real estate investing moves pretty quick.
Yes.
You know, I can't sit there and be like, okay, great. Like, yes, an accountant, fine. Maybe that's something that I don't necessarily need that answer in that second. But I do feel when we talk about our realtors, our attorneys, title companies, that these are people that we need answers back from.
Yes.
And my rule is always, if I call you and you do not call me back and you don't want to take my money, I am not going to call you again to offer it to you.
Absolutely.
Right. That's just kind of like my general rule of how, when I'm looking to see who I want to work with, that's usually the first indicator that I look for. So that's
Absolutely.
Those are really just across the line things that we should be looking for, and really kind of having our expectations very clear on what a response time really should be with anybody that we work with, let alone
anyone that we work with. Absolutely. And it's good business practice. You know, it's just good business practice. So yes, that's the first thing. Another thing is, and people ask me this all the time, same question. You want an accountant who is eager and willing to share and explain things to you, right? And so even, let's go back to the example of a 1040 tax return. You want someone who is going to explain. Most people, not most, there are a lot of people who don't understand what a 1040 really is. They don't understand the different lines. Sometimes accountants have a hard time because the Internal Revenue will change the format from year to year. So it's critically important that you have an accountant who will explain things to you. If you have questions, you want to feel that it's not you don't feel like it's a burden for them to answer your question. You know, you want them, you want to feel that they are willing to share the information with you, right? So that's from a tax perspective. That's if you have an accountant that's producing financial statements for you, monthly or quarterly, you want them to go through and explain, okay, this is what this means. Bottom line, you did great this year. Okay, great. So what does that mean? Do I need to change anything? Do I need to pull back on some expenses? Do I need to budget better? Budgeting is another thing. Sometimes there are businesses or business owners who need help with budgeting or coming up with projections. You want someone who's willing to do that. And I think one of the last things that come to mind, you want an accountant who is willing to strategize with you throughout the year. You know, tax planning, business planning. And so that kind of goes back to the responsiveness, but someone who's really a strategic partner in your business.
Well, and you had mentioned that with the idea of trying to find somebody that you would be in contact, that you would hear from, be in contact more with than just once a year. And the first thing that I'm sure some of our listeners thought about would be, what else am I supposed to talk to my accountant about outside of tax season? So can you just name a couple of those things that you, either your touch points with some of your clients, or when I hear that all the time, that with other service providers, that it's, well, we can help you strategize, we can help you kind of build, but I'm kind of like, you're, you know, the person that I have my bank account with, how can you really help me, right? Like you file my taxes, how can you really help me? So can you share a couple of those things about what an accountant can and should be doing that can be an asset to a real estate investor?
Oh, absolutely. So let's start with the accounting side and we'll respond to the tax side in a moment. So from an accounting perspective, say you have an accountant who is preparing, you know, your financial statements, they're entering your transactions. And this is something that I want to just mention. Please, 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 to help your accountant help you, to help us help you. As a real estate investor, make sure that you invest in some accounting software that is going to make your job easier. Starting out with an Excel spreadsheet is perfectly fine. But as things start to churn up and speed up, you're going to need something more than an Excel spreadsheet. So something like QuickBooks. We've all heard of QuickBooks, which is super affordable. It will give you a number of reports so many different reports it will afford you. So I always tell people that's the first thing. So say, for instance, a real estate investor has an LLC or a business or an S Corp or whatever. They have an accountant who is basically making sure that their transactions are entered for their different rental properties. You know, all the expenses, the revenues, the rental income, all of those things are recorded in QuickBooks. So what that accountant should be doing is reconciling your bank account every month, right? Making sure everything adds up. Also preparing financial statements either for you on a monthly basis or quarterly basis. It can be, there are a number of different financial statements, but the two most popular are profit and loss. So you will know whether you're making money or losing money. The other is a balance sheet. So you know your assets, your liabilities, your loans, mortgages, all of that. So that should be something that's done on a regular basis, unless you choose not to have your accountant present that information. So that is either going to be a monthly conversation or quarterly conversation, but I would say no less than quarterly should you be having that conversation with your accountant. The other thing is, let's switch to the tax side. So from a tax perspective, tax planning, those clients that I work with, we do tax planning quarterly, because oftentimes, and we've all heard this term, estimated tax payments. So internal revenue really expects us as business owners, even as individuals, a W-2 employee, if they see that you're not having enough taxes paid or withheld throughout the year, their expectation, internal revenue, is that you should be making estimated tax payments throughout the year. Well, one of the things that I do with my clients is quarterly, we'll have touch point meetings. It can be a 15-minute meeting, it may be a 30-minute meeting, but we look at, okay, year to date, where are you? Or for this quarter, where are you in terms of the money you've made, the money you spent? What kind of net do you have left over, kind of taxable income? We need to prepare an estimated tax payment for that. So it's basically looking at strategy, where you're going to end up at the end of the year. Do you need to put some things in place before you get to the end of the year, an IRA kind of to reduce your tax liability? And that's basically what tax planning is. It's just looking at how you can reduce your tax bill. And so we have those conversations with our clients at least quarterly. So from each perspective, an accounting perspective, a tax perspective, there should be some regular contact. Okay. In addition, one other thing that I do for my clients, we have monthly newsletters that go out, just basic information. So that's another way for us to stay in touch with our clients, just making them aware. This is something that you may not be aware of. Have you thought about this? Have you thought about this deadline? So our clients love that. They love getting that information because it's another form and another avenue to educate them. Okay.
Correct. And it's more than just, great, I'll see you in April. Yeah. Right. And keeping them in touch, and also the idea of keeping them kind of up to date with things. Yeah. So I want to go back to that first side that you kind of talked about with an accounting. So when you're talking about like an Excel using QuickBooks, you're really talking about how like an investor needs to kind of stay on top of their bookkeeping, right?
Absolutely.
On a regular basis. Now, for any of our listeners, if you want to learn more about bookkeeping specifically, we do have an entire podcast episode dedicated to that as well. I think it's actually episode 1.
Okay.
Of the Lady Landlord podcast. I think that was actually one of the first episodes that I had released was actually all about bookkeeping. But so do you recommend that an investor that even just has one property should be keeping an Excel, should be keeping all of these kind of statements? Like at what point? Okay, so at the very start, we need to start.
At the very start. Absolutely. Because if you don't start at the beginning, you'll forget things. It may be something that you paid for with your personal resources. And that's something else I want to touch on. And you have to make sure that you get credit for that on the business side. So it's a number of different reasons why and benefits why you should, day one, start keeping up with your information. Yeah, definitely.
And is that something then that I would need a bookkeeper and an accountant for?
Not necessarily. There are many bookkeepers that are well-versed enough that they know how to actually ensure that the transactions are being reported properly. So you don't necessarily need an accountant for that. But the key is, even from a tax perspective, when it's tax time, all you should have to do is present a report to your tax accountant and say, hey, this is my activity for the year. This is what I did. And it makes our job as tax accountants much easier. Okay.
That was one of the questions I was going to ask, is what else can an investor do to make your life easier when it comes around to tax time? So I'm hearing, make sure to have, a very clear, either QuickBooks or Excel of all the bookkeeping, nice and organized.
Yes.
Right.
Absolutely. Absolutely. That's the number one thing. Just be organized. Typically, when we receive documents from our clients, tax documents at tax time, we don't necessarily need to see every single receipt, and we may ask for documentation on certain items, but we don't need to see every receipt. We don't need to see every check that, every rental income payment. We don't need to see all of that, but we have to rely on the client to confirm that the information is accurate, right? And there's nothing that's, funny business going on, but just give us the raw, real numbers so that we can properly prepare your tax return. And if I may, Becky, one thing that came to mind, and I just talked about this in a conference the other day, one thing that I always tell new business owners, any business, any industry, when you start out, you want to make sure that you do not commingle your funds, personal and business. Please, please, please. And I'm sure this is addressed in that #1 video, that #1 podcast about, accounting and bookkeeping. Please make sure you keep your business and your personal finances separate.
So let's I'm going to ask you the $1 million question. There's also a full episode about this also on the Lady Landlords podcast.
Good.
But Geena, in your opinion, do real estate investors need to have an LLC for their properties?
This is my opinion. It is not required that you do, but I think it's in your best interest to do so for a number of reasons, not just from an accounting tax perspective, but also from a legal perspective.
Correct.
Because with an LLC, there's certain things that you're protected from as a business owner, liability wise. So definitely have a conversation with an expert, whether it's Becky or whether it's an attorney. Make sure you have that conversation about, should I or should I not? But I dare say, definitely, if you can, do that.
Correct. And like I said, we have a whole episode about why an LLC is important. So ladies, if you've not heard that episode, feel free to go back and take a look at that one as well. But it's helpful to know that from a tax perspective, that it's also important to have that LLC. And so when you say that now I need to make sure not to commingle my funds, you're also talking about now not only to have that LLC, but I need to now have bank accounts that are just in the name of the business.
Absolutely.
Right?
Absolutely. And I mean, even if it's like I have certain clients, they are W-2 employees, but they may have a property that they just rent out just to have a, they may have owned the property, they got another property and they held on to that old property, they rent it out. And so even in those circumstances, you don't necessarily have to have an LLC, but you definitely want to have a separate bank account for that property, for all of the money that's coming in and all the money that's going out, paying your utilities and all of those things. So it's always best from an accounting perspective to have some delineation between activities,
So even if I don't go the LLC route, which once again, I do not recommend, but if I don't have an LLC, then you're still saying Becky, should have one account. Chase will be my personal account. That's what I paid that's what I paid my life expenses out of. And then, I'm also going to create an account through Bank of America that will be for my rental property.
Absolutely.
Right? They don't have to be different banks, but I'm just using that to kind of separate. But like really just that idea that like all the transactions going in and out that have to deal with rental properties should not be commingled with your shopping and your groceries and your day-to-day life.
Absolutely.
Right?
Absolutely.
Gotcha. That's really helpful to know. And then when they put together kind of that like Excel, or like, once again, I totally understand using a software would be easier, but for that small time landlord, if they are using just an Excel, can you give me just a couple categories of what should be on that Excel?
Absolutely. So on Excel, of course, if you're familiar with it, there is a way that within a certain workbook, or if you go into a spreadsheet, you can add tabs at the bottom. You can add an additional spreadsheet. And so I would have one spreadsheet just for all of your revenue, or say, for instance, your rental income, tracking that by, property, by units, if you have apartment units, even tracking it by, the renter. Okay. I would have a different tab or spreadsheet for my other expenses. And you can be as elaborate as have a different tab for each expense category: utilities, homeowners association fees, insurance that you have to pay on the property, whatever those expenses are. but make that Excel spreadsheet as detailed as possible, so that at the end of the year, when it's tax time, you're not having to plow through your receipts and invoices and everything to find what you need. If you keep track of it as you're going forward, you don't have to play catch up, because that can be such a nightmare for accountants as well. We don't like playing catch up.
Right. And that sounds like something also that when I'm working with an accountant, it's really important to have that conversation about what categories do you need to see,
Absolutely.
right? Have that conversation and speak to your accountant and say, what information do you need? What should I put on this? So that way, if you're not necessarily using a software, or if you don't have enough properties to kind of justify that, at least then you could build an Excel, because you don't want to build an Excel and track it all the year through and then find out that it doesn't have the information that your accountant actually wants and or needs.
That's a very good point. Just have that conversation up front and see how the accountant works. You know, accountants have different ways of working. They have different methodologies. So find out what works for that accountant, so that you all can come together and have all the pieces together. So as Becky said, you're not at the 11th hour trying to scramble and kind of rearrange a spreadsheet. So that is a very good piece of advice.
So then now I kind of have a better idea of how to find the right accountant for me. But what red flags should I avoid when I'm calling an accountant to see if this is a person I want to hire or not, besides response time? But like, what would an accountant either like say, or what can I ask to be like, oh my God, this accountant is not a good accountant?
Yeah, that's a good question. That's a loaded question. So some of the things that I've heard and I've experienced, when you talk to an accountant, you want to feel that that person is focused in on you and the conversation that you're having, not that they're scrambled and just all over the place. You want to make sure that at least it appears as though, whether you're on a Zoom call or the phone, that they're taking notes and they're really taking in and asking questions and trying to understand your situation. If they seem, we get distracted just like everyone else, but if you get that feeling, go with your gut. If you don't feel that warm, fuzzy, you know, not that you need someone who's going to give you a big bear hug, but if you don't feel that connection, you know, beware. Other things I've heard, again, I won't go to the response time, but accountants who don't appear to be engaged in just making sure, like the example about having the conversation with an accountant up front to see, okay, is an Excel spreadsheet okay for me to present my information at the end of the year for tax time? How would you like to see the spreadsheet? And if they're not giving you some suggestions or some ideas, that could be a red flag as well. Again, I'll touch on it. The response time is really critical. If you can't get a call back, that's a problem. If when say you're having your taxes done by someone and they have no questions whatsoever, no question, there is always a question that a tax accountant will have, like, is this the right address? Or, you know, just confirm the social security numbers of your dependents or your children for me. There will always, I don't care how experienced an accountant is, they will have questions for you. And that's a problem. If they're not asking you questions or getting clarity or giving you suggestions, those are all things that you kind of want to, you know, pay attention to. I always say when you're interviewing accountants, make sure you get at least 2 or 3, you know, interview at least 2 or 3. So you'll have a point of reference. And you'll know who makes you feel like, okay, I think I could work with them, you know, because it has to be a good personality match too, you know. People always tell me I'm not the typical accountant. Like most accountants are like heads down, computer, and that's it. I'm kind of a social butterfly. Like I love talking to people and getting to know people. And I've adopted Becky as my cousin now, like, you know, all those types of things. And I'm only kidding. But you know, I just like to get to know my clients. I like to have a relationship with my clients. It's just not, I'm doing your taxes and that's it. I don't want to talk to you anymore until next year. I like to build a rapport with my clients. And so keep those things in mind.
And that works for you. I was just saying that this is actually maybe one of the reasons we haven't actually had an accountant on here before, because it's kind of hard to find an accountant that has the right personality to, you know, for some of these topics, for sure. And some of these other roles in real estate, you know, sometimes they're a little more dry than we would necessarily like. But I do find that important that it is somebody that you should be working with. Also, I like the idea, as you kind of mentioned, to interview, you know, 2 or 3 different people, kind of talk to them. clearly though, we don't want to be doing that in April.
Oh, no,
What,
no.
when should I be looking for an accountant? What
Well,
time
this
of
is the
year?
thing. It depends on the purpose for which you need
Yeah.
an accountant for. If you need a bookkeeper or an accountant to help you keep track of your business activities, your revenues, your expenses, all the activity for your business, then you're going to do that anytime. Okay.
Yeah.
The sooner the better. I would say the earlier you can get started with that, the better. In terms of a tax accountant, now is the time to start interviewing people. You don't want to wait until January to do that. So I would say anytime during the year leading up to the tax filing season for the following year.
Okay.
So you should, by December 31st, hopefully have someone that you feel like, okay, yep, this person is cool. Like I could really work with them and I'm going to have them do my taxes. And so get ahead of the game. Don't wait, because I'm telling you, starting in January, we get really crazy. Like we may start drinking a bit,
You got to make it through the day somehow.
We
right?
have to make it through. And now I've been telling so many people this, because they're like, okay, well, April 18th is over. So now you can go on vacation, you can do this and that. And I quickly say, because of COVID, tax is like a rolling tax season. It never ends. I was just talking with some colleagues of mine about that. So the sooner you can get in, the better, because, people are getting swamped already, people talking about next tax season. So yeah.
And that was actually gonna be one of my other questions, when you had said from like a red flag perspective, to make sure that that accountant is actually asking you questions.
Yes.
I feel like lately, once again, the way that the world's been moving, not only because of the pandemic, but also in general, everything else going virtual, that a lot of accountants are just like, yeah, just send me your W-2s through this online portal. It'll be a virtual, and then I'll just shoot you back what your tax returns are going to be. And there doesn't seem to be a lot of like kind of conversation like going on. I know my husband and I still will go and we book like a half a day.
Yeah.
And we go and we sit down and we actually talk with an accountant and go through all of our numbers and go through and actually do it in person. So it would be, there's clearly questions because you're sitting in the same room. It would just actually be awkward if there was no talking for 4 hours.
Exactly.
But I feel like there are less and less questions from accountants moving forward, because a lot of them are just send me your documents. You could be in DC, I'm in New York.
Yep.
I send you my, I don't even need somebody in the same state anymore. And then it's okay. Well, I can send you my documents and you'll just tell me when they're done and submit them electronically. Do you see that becoming a trend more in accounting?
I do. We've even gotten to that point, not that point, but we use a portal now because it's more secure. There are still certain people, like I have some senior citizen clients that I've been working with for a very long time. And they're like, no, I want to come see you. And it's like, not a problem. We still get together. Or if they are in a situation where they can't get out, I will swing by their house and pick up their stuff for them, and have a cup of tea or just stay at the door. But I will say that is becoming a trend, that, people are doing things more remotely. However, it does not take away from the fact that you can still have conversations. Even though the majority of our clients this past tax season they uploaded their documents, I still have a conversation with them by phone. I still have conversations by Zoom so that I can talk to them, especially if they're a new client, what the process is. These are next steps, kind of help them through the process, right? And even after their tax returns are completed, I will get on the phone or I will do a Zoom call and explain to the husband and wife, or explain to the single person, or explain to the business owner, walk them through the process, do a screen share. Zoom, Microsoft Teams allows us this benefit. So I will put it up on the screen and just walk them through it. Do you have any questions? Yeah, I don't understand that. Well, let me explain to you how that works. And it's just like meeting face to face. Really, I will tell you that the majority of my colleagues, who are all, accountants, and we all have accounting firms, very rarely now do they meet face to face. Very rarely. Really? And I think, COVID has kind of taught us that we can be as productive in a lot of cases, virtually as we can in person. And because the volume is so high, there was a time when I would do my clients' taxes sitting right in front of me, but I can't do that anymore because there's so many moving parts, so many moving pieces. So I applaud your accountant for still providing that level of service. So we do it a little differently, but we still ensure that the client gets the most out of the experience.
But I love that idea that there should still be a conversation at the end,
Oh,
right? Let's hop on a
absolutely.
Zoom. Thanks for sending me your documents.
Yep,
Let's hop on a Zoom and just kind of check in about like all those different things. So
absolutely.
that makes me really happy because I'm noticing that trend, and I really want to make sure that people are getting that same level of service, because getting your taxes done is not cheap, especially as you start
No,
to include LLCs and business taxes and all that. And rightfully so. Is a ton of work, and a ton of laws that you as an accountant would actually protect us from. So very deserved money. But it's something that from my side that I'm like, I want to make sure I understand what I'm doing, so that way I can also improve and set myself up for the next year. And
absolutely.
one of the main reasons that people do invest in real estate is for the tax benefits that come along with real estate investing. So I want to make sure I know what all of those things are.
Oh, yeah,
So I like having that conversation with an accountant. I love the fact that you hop on a Zoom, even if it's just to kind of review those things. But
absolutely.
can you talk a little bit about the tax benefits that a real estate investor should expect?
Absolutely. There's a long list
Yeah.
of tax benefits. And again, that's why real estate investing has become more and more popular and will continue to
Mhm.
be probably one of the most popular forms of business that people will go into. Um, so let's talk about the investor who rents property. They buy in whole and they're just renting. There are
Mhm.
so many benefits that you can gain, tax benefits.
Yeah.
One of the benefits, and Becky, I know you know all about this, that people often forget, even now, if I get a new client and they've been with another tax accountant and they have rental properties, depreciation is one of the most underused benefits ever. So make sure, do your research and make sure that your tax accountant is counting, including depreciation expense on your tax return. And it all depends on the type of investing you're doing. If you're a
Mhm.
flipper, that's a whole nother story. But right now we're going to talk about the renter or the
Yeah.
landlord. So depreciation is huge.
Can you tell us what depreciation is?
Sure, depreciation is just another way of getting a benefit, a cost benefit for the wear and tear on your property. So
Mhm.
in the case of a property that you're renting, internal revenue says that you can depreciate or spread the cost of this property over 27 and a half years. Okay. Now,
So specific.
yeah,
27 and a half years. I love that.
yeah, 20, I don't know how they came up with that. 27 and a half years. Say, for instance, you're thinking, well, I don't plan on keeping this property for 27 and a half years. I may want to sell it and do something else, but you can claim depreciation on that property for as long as you have it. And it is what they call in service. It can't
Mhm.
be a property that's sitting vacant and it's not available for rent. But if you have tenants in there and you are renting it, you can claim depreciation on that property.
Mhm.
And so again, it's just a benefit of sorts that you get for the wear and tear on your property, right?
Mhm.
So every year you get to write off 27, you get to write off a portion of that, the market value. It's basically the value
Right.
of your property. You get to write off a portion of that every year that you hold
That's
the property.
great.
Okay.
Okay.
So make sure you put that on your list because a lot of people don't do it and don't take advantage of it. Of course, any expense that you incur, for the most part, there may be some
Mhm.
exceptions, that has to do with your rental properties, your business, and real estate. So you have a rental property and you're paying homeowners association fees, you're paying property taxes, you're paying
Mhm.
you have a mortgage, you got to pay mortgage interest, right? You can't write off, a lot of people think you can write off the mortgage payment. You cannot write off the mortgage payment. You can only write off the interest, but that can
Mhm.
add up quickly.
Yes, it
Um,
can.
yeah, right, right. So also things like I'll just mention a couple others because like I said, it's a long list.
Yeah.
So you have to have you have to paint the property. You have somebody moving out, somebody moving in, you got to paint, you got to put on new
Mhm.
doorknobs, repairs, you can write off that as an expense. Improvements, you can write off, you add a bathroom, you add a bedroom, you can write that off. However, it depends, there are a lot of nuances there. So whether you can write the full amount off in the
Mhm.
year that you paid it or incurred the cost is one thing, or whether you have to capitalize it or spread it over time is another thing, but make sure you put that on the list as well.
Gotcha.
You gotta, have a cleaning crew come in. It's just so many things that you can do from a rental property
For
standpoint.
all those expenses, right? Because running rentals is expensive. There
It's
are a ton of
expensive.
different things that we have to spend money on. So those are all things that really should be tracked, as you mentioned, kind of from that bookkeeping,
That's
right?
right.
Every trip to Home Depot
Yep.
should really needs to be accounted for, right?
Yes.
And
Everything.
and also the mileage, right?
Yes.
Of me, that's a business expense, trying to making sure that I'm going, picking up tools and what are the
And all that.
materials I need and all that.
Absolutely. Now, one thing I'll say about mileage, and people forget about this or they don't know, is anytime you're going to claim mileage expense, internal revenue requires that you maintain a mileage log. Okay. And so make sure that they have apps on phones now that you can download to keep track, because you cannot write off for your business expenses, going out to dinner, taking your family to dinner and doing all this other stuff. It's only business related mileage. So you want to make sure you keep up with your total miles for the year, as well as the mileage specifically for your business. Okay.
And that goes with any expenses. It can't be
any expenses. No, absolutely.
You can't be taking your family out to dinner and then saying, okay, well, this is a business expense.
Business
the dinner is an
right,
expense.
Right.
Yeah. This meal is an expense. We can't be
There's
using
some
those
exceptions to every rule, but yes, generally that is exactly right. So you want to be really careful with that. Now, the one tax benefit that has become super popular is something called a 1031 exchange. 1031 exchanges, a lot of people don't know much about that, but I find every year there are more people asking questions about it. So a 1031 exchange is simply, I have a property, I have an investment property, and I want to sell the property, but I know my capital gains are going to be through the roof, right? So what you can do through a 1031 exchange is simply a swap of one real estate asset or property for another, right? And if it's a similar property, I go from a single family home to another single family home, or a commercial building to another commercial building that's similar. If I hold that new property for over a year, then I can defer my capital gains tax until I dispose or until I get rid of that property or sell it.
Yeah.
So I have found that a lot of, look up 1031 exchange. And Becky probably has a video on that somewhere. But look up 1031 exchange, or if you think that's something that you may qualify for, you may be interested in, talk to your accountant or find an accountant you can talk to. Some attorneys, there can be a tax attorney that will help you with that. One thing that you have to be aware of with the 1031 exchange is you have to have what they call a mediary. You have to have an impartial, independent person to kind of handle the nuances of the swap or the exchange. But that is huge. People have been able to save a lot of money in taxes, rightfully so, by doing a 1031 exchange. And some people I know some clients that do 1031 exchanges on and on and on. I mean, they've done it, they've become experts at it. So that is something also.
No, that's a great way to be able to sell that property, have some of that profit, but not be having to pay so much maintenance and taxes from it. Because really, like you said, you're swapping that out into like that next property. One of the other terms that you hear all the time that comes up when it comes to taxes is also claiming the real estate professional status.
Oh yeah.
Can you talk a little bit about that?
Oh yeah. So, and I don't have all the facts. I don't remember the numbers because so basically what it is.
We won't hold you to.
Well, thank you. So basically the concept is, are you considered a real estate professional or an investor? And it goes back to how much time you put into that activity. If I'm working a 9-to-5 W-2, I'm working 40 hours a week, and I just have a property or two that I'm renting out, then I am an investor, right? However, if I'm trying to think of a good example. If I decide to quit my job, I leave my accounting consulting firm, and all I do is real estate investing. I'm flipping, I'm renting, I'm doing it all. Then there's some additional benefits that I get just by being classified as a real estate professional. Now, I think one of the requirements in some categories is that even if you're a real estate, you have a real estate license, but it's not required. Certain real estate professionals can qualify for a number of different benefits. So, you know, if anybody has questions, I am here to answer your questions.
Yes.
But yeah, and you want to make sure that your accountant is aware of that, because it goes
Correct.
back to how many hours. Am I the landlord, or do I pay somebody to do that? How many hours do I, you know, put into my business? Am I contributing to my business am I doing it all? Am I doing the landlord side? Am I doing, you know, property management? Am I doing it all? And so there are some very specific rules there. So you want to be very careful.
Correct. And like you mentioned, you can't have that W-2 with it.
Yep.
You don't necessarily have to have a realtor's license. It's not just, it's not for real estate brokers. It's for those that are working in it. So that could be really a great benefit to some of our listeners.
It really could. It really could.
So that's a helpful one. The other thing, the last one that I'll let you get back to your busy work here, but the last question I was going to ask about is one of the other terms that always comes up with real estate investing, which is cost segregation.
Oh yeah.
Can you talk a little bit about what that is? And so that way our listeners will know if maybe that's a way that they need to kind of go as well.
Yeah, so cost segregation is a specialized area, and that is not my area, but I know enough. I have colleagues who specialize in that, and it takes a specialized expert to help you with cost segregation. And it's basically segregating the costs that you incur for a specific property and how that's treated. There special tax treatment. Most people will never even get into cost segregation because it is so specialized and it's very complicated. And so basically it's segregating the costs by property, and you can benefit from those costs and how they're set up. So again, kind of like the 1031 exchange, you need that independent mediator, that person that specializes in that. With the cost, we call it cost segregation, you need an expert to help you kind of figure out what that looks like. It's almost like coming up with the cost segregation plan and what that's going to look like. So it's kind of like a roadmap and how you're going to make those things happen. But cost segregation is used by people who do like high level investing, a lot of commercial, high net worth properties and that sort of thing. So if you fall into that category, definitely explore cost segregation because it could benefit you.
And it's not cheap.
It is not cheap. All.
So that's why it's usually either more expensive buildings, commercial buildings, those types of things, because the idea of spending, $30,000 to do like a cost segregation study to save yourself $5 on the one rental you have, might not be the way to go.
Right.
But as we're growing our portfolios, these are definitely different strategies that we need to start thinking about. So
absolutely.
So Geena, thank you. I appreciate your time today. I think you gave our listeners some great insight about how to build that relationship with that accountant and why we should be doing that early on. Yes. It doesn't matter if you have one property or 100 properties. These are things that we really need to start looking into. So I will make sure to put your information down in the show notes in case anybody has any follow-up questions or wants to learn a little bit more about some of those strategies that you had mentioned. So thanks for being on today. I appreciate your time.
Thank you. I enjoyed it.
Otherwise, for our listeners, please do make sure to subscribe wherever you listen to podcasts, or if you are watching us on our YouTube channel, as we come out with new episodes every single Tuesday. So make sure to subscribe now so you do not miss next week's episode of the Lady Landlords podcast. Thanks so much, and I'll see you next week.
Thank you for listening to today's episode. If you're feeling stuck in your real estate journey, visit lady-landlords.com/roadmap to book a one-on-one workshop with me. I'll help you determine your next best strategy. Or you could subscribe to our newsletter for exclusive tips and offers. Invest with confidence. Become a lady landlord today.